I think we can all agree that one of the things that top of mind of business owners, including myself, is growing your business. And in order to grow your business, you need to assemble a top team of talent. And when you find that right person or those people, it creates an excitement in your organization, right? I mean, fresh energy, ideas, expand your niche, your reach, your network, open up new markets, and with the ultimate goal of growing your top line. Those are things that are always in play for business owners, always a challenge. And I'm really excited to announce today that Osage is just brought on a new senior advisor, Jack McGlinn, based in Chapel Hill, North Carolina. Jack, good morning.
Good morning. Thanks for having me, Keith.
Well, thank you. For our audience, again, kdee, Osage Advisors, ins and outs of selling a business. Jack comes to us with a great toolkit of experience, over 25 years of M&A experience. Started off as a CPA like myself and has a very interesting career path that got him to Osage, and he is a terrific addition and fit, and we're really excited. Jack, maybe spend a little time this morning with our audience, just kind of going through a little bit about your background, how you started, and how you got to where you are today.
Sure. Well, as you mentioned, I started off as a CPA when I was a accounting major at University of Notre Dame. Go Irish! So from there, I went to Price Waterhouse in Boston. Probably the best thing that happened there was I met my wife at Price Waterhouse.
Oh, terrific.
So spent 4 years there. Realized that wasn't exactly what I wanted to do with my career, but did learn that I really liked working with smaller businesses. We had a wide range of clients, real big ones from like Fidelity and State Street, down to some small tech related businesses that were raising funds and trying to stay alive, and one that probably had 13 different rounds of preferred stock that they had raised, trying to keep going. So the smaller ones were the ones I enjoyed, and that I wanted to work more with them. So I went back and got my MBA degree, which is why I'm down here in Chapel Hill, North Carolina. I moved down in '95 and attended Keenan Flagler, which is UNC's business school. And so I got my master's, and while I was doing that, I was doing some consulting work. Met a couple different local companies in North Carolina. One I spent kind of a summer with, working with them, trying to raise some money for an acquisition they were doing, and another one that was kind of a startup fiber optic cable company, and was working with them, trying to help them get going. So ended up when I graduated, I ended up working for one of my consulting clients, which was a company called Triangle Biomedical Sciences, which was a laboratory equipment manufacturer and distributor down here in the Triangle. So that was kind of the start of it, and then worked there for about 5 years, and it was fun. I mean, I was fresh out of business school, was still in my 20s, and we were doing acquisitions of product lines in that laboratory equipment space. It was a small business, but we were doing acquisitions from larger companies and international. We bought a company in the UK, bought a company out of bankruptcy, and had international operations, opened up a Germany office. So even though it was a small business, we had a little bit of everything going on. So
Was that
it
your
was kind
first
of a
taste?
great experience.
Yeah, was that your first taste in the deal world, like making acquisitions for this company?
Absolutely. Yeah. Yeah. I
And
mean, yeah, you hear about acquisitions and M&A and barbarians at the gate and those kind of things, but I was I had that kind of battleground experience. Had to learn from the ground up
yeah,
and
trial
just
by
kind of got
fire.
thrown into it.
It's interesting because you and I are cut from the same cloth. I mean, I had the opportunity when I came out of college, CPA as well, right? And I wanted to work with family closely held companies. So I turned down some big jobs, big corporate jobs, and I'm working with at the time some what's called big eight accounting firms, and I went to regional firms so I can really work in that space. So here you are working with the company, the Bioscience company down there in North Carolina, and right, they drop you into the fire. Right, you need
Yeah.
to right, you need to kind of assemble your own toolkit of how you're going to do things. I mean, you have your advisors and whatnot, but you're the face, you're the front, you're dealing with the prospective seller at this point. And,
Hmm.
as a young person, and it'd be interesting to just kind of like some of the takeaways from that experience of running that business, because, it's like all of a sudden you meet with somebody, you think it's going, and then the emotional aspect of the transaction starts to come up. Nothing to do with the fundamentals, nothing to do with the financials, nothing to do with we want to do a deal, but it's the individual's personality and how you manage that relationship is something that it just takes you learn over time. You can't teach it. So I mean, how did
Right.
that all play into it for you as a young guy back then?
Yeah, and I mean, it was a lot of relationships. I mean, we when you say we had advisors, we didn't have a lot of advisors because we couldn't afford a lot of advisors, and we did everything pretty bootstrapped. So a lot of it was learning, learning on my own, but a lot of it was just asking questions, whether it was from our advisors or from the other side's advisors. But it was just asking us kind of, what's market, what's normal, what's this term mean? First time I've seen that, explain it to me. So you're dumb, but you don't play completely dumb.
Right.
But it's more just, I mean, yeah, and everything about business. It's all about the relationships and just enjoying the people that you're working with, so that they do share information. It's not confrontational. It's information share. So I mean, a lot of it, we'd have some difficult conversations and some negotiations and debates on things, but always try to keep it on a business level and try to keep friendly on a personal level, so that you could have that information share. But I mean, it was kind of learning on the job. I mean, we were doing everything ourselves. We were not only were we negotiating the terms of the deal and the acquisition, but we were coming up with a financing for it. We had to do the diligence on it, on the products. We had to get the training for to transfer the manufacturing, and then we had to do all the integration
All the
stuff, as far
integration work.
as
Yeah.
yeah, bringing the inventory in, bringing the manufacturing, the SOPs, everything. That was we were doing it all ourselves. And when I say it was a team of maybe we'd have three people. It was the founder of the business, myself, and we'd have an operations person or two. I mean, I started off as CFO and became president after a couple of years, but I had a one person accounting department. So we didn't have a whole lot of heavy lifting to do. So
We call that learning on the job as you go
yes.
along, and you learn from it's like you learn from your mistakes, right? You don't know everything, and you try things and you work things, and that didn't work out. And then so you're trying to run your company for one, and then you're also trying to make acquisitions on top of that. So you got this bucket, that bucket, and then the other bucket, you have your bank on the other side that wants information because they need to underwrite the deal. So you're
Right.
trying to get information from the potential seller that you can transform into a format that the bank wants to see. The bank keeps on coming back to you with questions. You go back to the seller. I said, I already answered that question. They start getting a little agitated sometimes
Yeah.
due to the fact that why do you want all this information, right? I already gave you that information, but you're
Hmm.
getting someone else that wants a little deeper dive in that information. So you got a real perspective there of both sides of the table when you're doing these deals. And in the meantime, you got to run your business. You got people like calling you about just normal stuff, right?
Right.
So
Right. Oh yeah. Now we had everyday business to run. So
everyday business to run. So you were there for how long?
about 5 years.
5 years,
It was from '97 to 2002. So a little
and
about 5.5 years.
and then after that, and so so now you've run a company. You've been a CFO. You're public accounting, like I was. You came into as a CFO, where I did a lot of that work myself, and then next thing you know, you're running a business similar to me. So you have this toolkit, And then you're also got a taste of M&A, which to me is why I started Osage back in 2001 when I was running a business and doing acquisitions. I said, this is, I think this is a place I want to be, right? So there you are, you're 5 years, and then you go on, and what's the next chapter in the Jack McGlinn life, right?
Yeah. Yeah, well, it's interesting. One of the acquisitions we did was a company out of bankruptcy, and I learned a ton on that one because when we're in a federal bankruptcy court, I'm negotiating with senior lenders, mezzanine lenders, equity, preferred equity holders, and this had been kind of it was a Florida based company had raised a bunch of money, so there were a lot of people involved, and a technology that was still, it was good technology. It just they kind of ran out of time and money on it. But I learned a lot about debtors' rights and a lot about the how the legal documents actually play out in these things. And didn't realize at the time, but as I'm raising money to fund that acquisition, I ran across Capital South Partners, which was a newly formed SBIC investment fund out of Charlotte, North Carolina.
Basically a
Uh,
private equity fund, right?
right, right.
Yeah.
My eventually my future employer. So raised some money from them. Worked worked with them for 2 years, which is another story we can get into. But had a good relationship with the founder there, Joe Alala, and I was like, hey, this would be a good next step to kind of go to the lending and investing side. As private equity, I mean, lower middle market private equity was really just getting started back then.
Right.
So it was it was a good opportunity to step in a very young firm. I mean, at the time it was just a couple people, and so I joined them in 2000, end of 2002.
Yeah. So 2002. So that's, I started Osage in 2001. And, back then, private equity was not a common known entity, right? They were
No,
private equity because they wanted to be private. So as you may recall back then, um, when you Googled, or yeah, Google was around then. Yeah, you went to a private
was it? I'm not sure.
just started, I think, right? You went on AOL, whatever it was, right? You Google them, and the private equity would come up, and all it would be is like their name and an investor login. There'd be no other information. There, today, if you look at a private equity firm today, it's all about transparency, right? And back then, I think there was maybe, I don't know, around 1,000 equity firms. If I can't call, but today there's thousands, right? 4,000 or 5,000
Right.
equity firms, and they all come in different shapes and sizes. But back then, I mean, you could not get to. You really had a network to get to those private equity people. It wasn't like they easily get them, by calling them up, because it
Right.
just wasn't happening. So it's evolved into a whole different market now. But so you're working with private equity, SBIC funds, which were somewhat backed by the federal, SBA, getting involved in those smaller businesses, and now you're doing a turnaround. And like, I have the same experience. I did a turnaround when I ended up when I sold my accounting practice. I took a company public, growth mode, and then I came back to Connecticut. I got into the same situation, a company that was in distress. It's a whole different skill set because it's crisis management, right? For different levels. So here you are, you're buying and growing businesses, you're making acquisitions, you're running a growing company, and then you come into a situation where there's a lot of hair on it, as they call it in the trade, right? How did that help you shape how you are today?
Yeah, well, when I got into Capital South, I mean, Capital South was just getting started. They were on their first fund. They had just started raising a second fund, and Capital South itself was just, I mean, it was just getting started. I mean, that wasn't a turnaround. There were some initial investments that were, that I had to get involved in, that again, were very small businesses, had taken a bit of money, and some of them were in trouble. So I had operations experience. So I got in there and I worked with some of the investments that weren't really panning out as had been planned. covenant defaults, things like that. So, including one that we ultimately did have to take through a bankruptcy process, which my prior experience helped out a lot in
Hmm.
that. And so, we were able to save that business. I mean, it was that was one of those where the business owner literally handed me the keys to an empty building and said, good luck, but he didn't mean it. And we were able to resurrect that business. We brought back some people. They got it going again, and ultimately sold it back to that management team that came back in to resuscitate it. So, it wasn't a great investment story, but it was a good story as far as the things can make it through troubled times, and if you have good people, they should benefit from that. And so it worked out well from that perspective.
So yeah, you took your toolkit, right? We talked about, right? Your financial toolkit, your M&A toolkit, your toolkit dealing with bankers, your toolkit working in distressed situations, and you really are but this great asset value, operating asset value to the equity fund. So you started
Mhm.
with them in what 2002. You moved over, and how did that whole thing kind of evolve for you over the next several years? Um, because they're a
Yeah,
very respected firm right now on a
it was
national
interesting.
perspective.
I mean, we got in there, or I got in there, and again, it was existing business, existing portfolio. So I kind of split my time between business development and the portfolio, and looking for business development, looking for new investments that would bring them in, look at them, screen them. There's a whole investment process, and it was almost secondary when I started because I was just trying to get my name out there, get the company's name out there. So we were based in Charlotte. It was pretty Charlotte centric, and then North Carolina centric. And I started going up to the Virginias, and we started calling on Florida. I eventually was going to Dallas a good amount, and up to Philadelphia. And so we were eventually expanding where we were known. In fact, at one point we changed our name from Capital South to Capitala, just because we weren't just doing deals in the South, and we weren't just looking in the South. So,
Hmm.
through our kind of efforts of doing the business development, we ended up opening a Florida office. We had a DC office. We had a Dallas office. These are all areas that people didn't know us, but we'd go in and start knocking on doors and visiting people and saying hi and telling this is what we do. And eventually we got the name out there enough that we could open up offices and bring in deal flow from there. So that was the first part is just kind of opening up the funnel, getting
Right.
more potential investments to look at. Again, managing the portfolio that takes a lot of time, especially as the portfolio grows. But yeah, we had an investment. I mean, it was kind of a two-person investment committee almost to start with. And so we were looking at deals and executing deals, and then we had to grow the team. We had to bring in more analysts and associates and VPs, and we didn't even think about it at the time really, but we were growing a small business. We were bringing in talent just like you led off with, and growing the firm. And next thing you know, we've got a good sized company, right? It's not just, I mean, we were growing as an investment firm, but we're also growing as a small business
Yeah.
with these people.
Well,
So
it's yeah. I look at it.
uh,
Yeah. It's all of a sudden you look in the mirror and you walk in the door and there's like 8 people around, 10 people around. Like, how
yeah,
this all happen overnight, right? It's just like it goes quickly, but if you got the right people, and you got the right talent, it's all going to mesh together, create an energy level that's a recipe for success, right? So, all right, so I'm going to come back to Capital a little bit later, and maybe our next episode. But so after Capitala, right, you were there for how many years again?
20.
20 years. You decided to make a change um, based on your skill set, and that took you to well, eventually took you to us, but
Yeah.
for a couple of years out there, I think you were looking to do your own thing.
Yeah, Capital continued to grow. At one point we had taken a couple of our funds, went public with them. So with that, we had to add all kinds of compliance and all the regulatory issues and stuff. So we continued to get bigger, raising more funds, moving up market, and as you raise funds, I mean, these are long-term commitments for partners to be in, because it's, 10-year investment period and then 5 years of selling off assets that came in later. So it's really, it's almost more than a 15-year commitment. And at that point, we were moving upstream, doing both, debt and equity, but larger debt deals. And it was just kind of getting out of my, not my comfort zone, but just kind of what I enjoyed
Your
doing,
passion.
working with small businesses.
Yeah.
So at that point, as Capital raised the sixth fund, it was a good time for me to step out, to do something different. Actually had a couple of investments that didn't fit the new fund six, that I was pursuing, and thought that would be kind of a good way to step out and be, a direct investor myself. As some transactions do, those didn't pan out. One of them I was working closely with, and urged them to go back and negotiate for more of a seller note, as we're trying to spin out of a bigger company, and they got 100% seller note. So,
Oh.
so all of a sudden there wasn't a need for some equity capital coming in. So those things didn't work out. So for about a year or so, I was kind of acting as an independent sponsor. So without a firm, without a dedicated fund behind me, I was out looking for acquisitions. Of course, that was during 2022, 2023, which ended up being, some of the slower deal markets in the last,
Yep.
2 decades. So, had a couple swings at bat, and, but nothing came of it, and was really looking for something to do, where I could still use my experience, and be involved with small businesses. And that's, that's when I ran across kdee and Osage Advisors.
Well, we're excited to join. You're joining us. Your skill set fits, just overlays my skill set and our team skill set. What we're trying to bring to our clients is a vast, deep experience that we can help them when they're looking to sell their company, that we can advise them in a way that we find the right buyer that's the right fit, and still appreciate, everything they go through on a daily basis. So when they sell their company, they feel good about it. So we're running a little bit short on time today, but Jack, I want to ask you to come back. I want to drill down a little bit on some of the deals you worked on, and, get a different perspective on those deals, from a buy side perspective, because you are buying smaller companies on the private equity side, and kind of share that with our audience. So if you have the time, I'd love to have you come back for another episode, and we can continue the dialogue.
Yeah, absolutely.
Great. Well, Jack, thanks for being with us today. We'll see you at the next episode. And thank you for joining us today. My name's Keith D., President of Osage Advisors. We appreciate you tuning into our podcast, The Ins and Outs of Selling a Business. If you like it, you can always subscribe to our YouTube channel. To learn more about Osage Advisors, you can visit our website at osageadvisors.com, or you can email me with any questions at kdee@osageadvisors.com, or feel free to pick up the phone and give me a call at 860-767-3273, extension 1001. Thanks again for being with us, and have a great day.